This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Starting today's show is Mark Dikeman, Kansas Farm Management Association's Executive Director, with an economic and financial analysis of Kansas farms in 2023. KFMA's Extension agricultural economist Glenn Conover, Lindsay Bryant, Dillon Rapp, Aaron Meisenheimer, Jacob Grinstead, and Chelsea Plummer continue the show with a quick financial summary of the farms in their association. K-State dairy specialist Mike Brouk ends today's show by explaining the steps that are taken to ensure dairy products are safe, as consumers have been asking questions due to the recent HPAI detection. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our show being joined by the Executive Director of the Kansas Farm Management Association, Mark Dikeman. Mark, thanks for joining us today.
Thank you very much, Shelby.
Mark, wanting to talk about some of the economics from this past year for farming operations, and first, looking at what net farm income has been doing.
Within the Kansas Farm Management Association, we collect a lot of data from farm families across the state. We've worked the last few months to kind of summarize that, to put together the economic analysis for each of those farms, and then to summarize that data. For 2023, the story of the year was really the continued drought. Drought had a very significant impact in 2022, continued and really expanded across the state in 2023. With reduced yields and depressed prices in 2023, net farm income was about $98,000, just a shade over $98,000. Our value of farm production, which is our measure of gross revenue, was about $831,000, average over 823 farms. That was down almost $65,000 from the year before. And what's kind of interesting in that, the livestock share of that, in particular beef cattle production, backgrounding, feeding, that had a very large impact on that value of farm production. In 2022, livestock revenue essentially accounted for about 16% of our total revenue, and in 2023, that jumped to almost 23%, almost a quarter of our total revenue. So a very significant jump, and beef in particular had a very large impact, a great influence in the profitability of farms throughout the state.
And something maybe not helping so much with profitability for farms, interest rates, and what changes did you see there for 2023?
Interest rates have been a question for all of us, for ag producers, for Main Street businesses, for W-2 wage earners. Interest rates have really been a concern for the last several years. Our effective interest rate, which is we calculate based on the average interest paid over all 823 farms that are in the summary, divided by their average total debt for the year, that equals to about 4.3%, which is a little bit surprising that it's not a little higher, but it's a fairly significant increase from the year before. The other interesting piece to the interest rates is when I look at just the predominant crop farms within the association, calculating the crop share of interest expense and spreading that out over all crop acres, the average has actually decreased from 2019 through to 2023. It's been about it's roughly a 5 or so % decrease in the interest expense per crop acre. Again, that's an interesting phenomenon with rising interest rates. I think the profitability or the high profit in 2021, really farms were able to pay off quite a bit of debt, reduce that total debt load So that could have an impact on it.
Something else really important for farmers, government payments. And what were you seeing there, Mark?
That's also very interesting. As I mentioned earlier, the net farm income for the state was $98,299. Net crop insurance proceeds, so that's crop insurance indemnity payments received minus premiums paid, was about $82,500. Of that, $98,000. When we consider government payments as well, total government payments between crop and livestock payments was about $33,800. So crop insurance proceeds, or the net crop insurance, accounted for about 84% of our net farm income. And when we look at total that net crop insurance and government payments, it's about almost 119% of our net farm income. So very low. We would have been negative in net farm income without crop insurance and government payments. Did
you see a lot of those payments being tied back to the drought?
I would say the crop insurance proceeds are directly related to the drought. Many of the government payments, or I guess I should say much of the government payments that we saw were are not directly related to disaster. They are more the emergency relief program and similar types of programs that are more ad hoc disaster payments contributed to that. There were areas where the typical government payments did have a large influence, but for the most part, those ad hoc government payments were ad hoc disaster payments were the primary source of revenue.
Mark, as we're talking a little bit more about crops, what changes did you see in yield and price?
I mentioned earlier that the drought we saw was very much continued from 22. When I compared yields in statewide average yields in 22 and 23, there really wasn't a large difference in production. Corn yield was actually up a little bit over 2022. So statewide average was about 105 bushels for corn. That's over all dry land acres within the farms that we work with. So it's up from 22, but it's down pretty significantly from our longer term average. Milo or grain sorghum, a similar story. Soybean yield was very similar, but again, down from our longer term average. And wheat, kind of a similar situation. The key thing is that there was a large decrease in commodity prices, in grain prices from 22 into 23. And what I think had a big influence on net farm income is the fact that decrease happened at the beginning towards the beginning of 2023. So grain that was produced in 22, carried into 23, a lot of that grain was sold for much less than what we had valued it for inventory purposes at the end of 22 or beginning of 23. So in essence, that grain lost quite a bit of money, driving net farm incomes down. So with similar yields to 2022 and depressed prices, we saw a dramatic decrease in net farm income. And I don't know that I mentioned, but our net farm income in 22 was about $177,000. So our $98,000 is a very dramatic drop from 2022.
Mark, rounding out today's conversation then, wanting to mention a trend that you're seeing in per acre crop inputs.
The last several years, the fertilizer price spike was heavily discussed, and a lot of worry around that. And obviously, we've seen on a per acre basis, we've seen a pretty significant increase in that fertilizer price. Chemical and seed expenses have followed that same pattern. When we look at seed expense over all crop acres, which we consider hay acres as a crop acre, so there's not much seed or chemical or fertilizer input in many cases there. we have seen since 2019, about an $8 an acre increase in seed cost, about $15 an acre in fertilizer cost. And one of the, although it's a smaller component of expenses, one that is extremely important to producers is the cost of crop insurance. In 2019, on a per crop acre basis, our producers' share of crop insurance averaged about $11 an acre. And in 2023, that had jumped to almost $18 an acre. It was about a $7 increase in a 5-year time period. That's pretty alarming. And crop insurance is a very critical piece to make sure that our producers can cover costs and can continue to operate.
Mark, if people would like to read more on this summary, where can they do that?
That's a great question. Our executive summary will be posted on AgManager.info /KFMA. That summary should be released very quickly here and should have quite a few more details on production, on costs, revenues, and that's broken down by not only for the state but for each of our 6 KFMA associations.
That was the executive director of the Kansas Farm Management Association, Mark Dikeman. I will put a link in today's show notes on agtoday.net where you can check out the full summary from KFMA. We're cutting to a short break now on Agriculture Today, but stick around because when we come back, we'll be joined by KFMA Extension Ag economist Glenn Conover, Lindsay Bryant, Dillon Rapp, Aaron Meisenheimer, Jacob Grinstead and Chelsea Plummer as they do the financial summary from 2023 for their KFMA associations. We're cutting to that short break now. You're tuned in to Agriculture Today, and we continue our show talking with KFMA's Extension Ag economist. We start with Glenn Conover in Northwest Kansas. Glenn, what has net farm income been looking like for your association?
Net farm income for 2023 came in at $127,000. Obviously, a significant drop from the previous couple of years we've had. For instance, our updated numbers for 2022 were $288,000. Mark mentioned the net crop insurance. Our net proceeds come in at $135,000 for the association. So without specifically net crop insurance proceeds, we actually would have been negative, obviously, on the net farm income. Moving into total expense ratio, the average for our association was 90 cents, meaning we spent 90 cents to make $1 in 2023 as compared to 75 cents in 2022. If you kind of look at the yields again, I think it was maybe more of a distribution of our rainfall for 2023. If you look in Colby, good majority of our rain came in May. I think it was mainly just a timing issue because we were really actually on average in regard to rainfall for what we had in our Northwest area. But yields again come in significantly lower than 5-year averages. So for irrigated wheat, 66 bushels to the acre in 2023. Our dry land was actually 33 bushels to the acre as compared to a 48 bushel average for a 5-year average. Irrigated corn at 155 bushels, 15 to 20 bushels lower than our average there. And we also see the same for milo as well. For many of our farms, cattle really propped up net farm income in many aspects. On our beef cattle enterprise, we actually had a net return to management of $92, which often we see as negative there, actually. So I think big things going forward is just to maybe not try to make a profit using some risk management tools, but for sure use the price risk management tools that are out there to at least help you support your farm going forward.
Moving on now to Southwest Kansas, we're joined by Lindsay Bryant. And Lindsay, what has net farm income looked like for your association?
2023 was a pretty rough year for a lot of producers in Southwest Kansas. As Mark said, the drought continues to be an ongoing problem, as well as severe weather conditions, kind of spotty throughout, resulting in some held out crops and things like that, especially in our further west counties. Yields were kind of all over the board due to the spotty conditions and where the rains hit and the timeliness of that. Wheat production was down while our Dryland corn and milo were up slightly. Our irrigated crops were pretty consistent. And although the yields didn't vary very much, crop income was down across all crops quite a bit due to the price fall that Mark discussed. However, there was an increase in that cattle income and the crop insurance proceeds, resulting in a fairly stable value of farm production. Our total expenses were up also about $45,000, bringing our net farm income in at $103,000 for 2023, which is down from $144,000 in 2022. Our net crop insurance proceeds were $160,000. So right there, without that, we would have already been significantly negative. And then government payments around $45,000. So without the combination of those two, net farm income would look a lot different at basically a negative $103,000 instead of positive.
Moving on across the state now to southeast Kansas, we're joined by Dillon Rapp. Dillon, what are we seeing for net farm income in your neck of the woods?
So our 2023 net farm income was about $116,000 for the year. It was $146,000 the previous year for 2022, so we did see a pretty drastic decrease. Some of our eastern counties, especially within our association, raised pretty decent crops during the year, so we didn't have quite the same drought impact as a lot of the rest of the state did, and especially the western part of our area. One thing that's important about that $116,000 net income is how it relates to our family living expense. So Mark touched on interest rates earlier. That's one place we've seen that change in the last few years. And inflation's been pretty rampant, especially as we see what our family living expenses, and not just the farm expenses we've already touched on, the family living expenses have really increased the last 2 years. So if we look at our $116,000 net income, that is not enough for 2023 to cover our average family living plus taxes. So if there's no non-farm income available to support those family living expenses, that means net we've got to borrow money to be able just to pay our living expenses. And on average, we did see our average financial positions decrease for 2023. Our debt to asset ratio trended upward. Our current ratio trended downward. So our farms were not in as good of a financial position at the end of 23 as they were at the end of 22. Because we've had some good years the last few years, we're still better off on average than we were 5 or 6 years ago, but we kind of went the other direction on some of the progress we've made the last few years. On average, our yields were better for 2023 than they were the previous year, but with the decrease in prices, our gross crop value was basically the same. As others have mentioned, the livestock sector really boosted profits, especially with beef cattle, probably the highest we've seen in around 10 years or so. So that was definitely a big contributor to our net incomes.
As we continue to move across the state, we're now joined by Aaron Meisenheimer from South Central Kansas. Aaron, what are you seeing for net farm income in your area?
Well, it seems like the last few years, our net farm income has been cut in half each year. And this past year was the exact same. In 2022, we were around $136,000, and this past year, we ended around $62,000. And like everyone's been saying, crop insurance was very important, big contributor to our net farm income. And so if you were to take that out of the picture, we'd be a negative $65,000. Along with that, if you include the livestock value of farm produced, that was another key contributor this past year. It made up about 8% of our value of farm production. And looking kind of at our association as a whole, we kind of divide things into regions. So if you kind of look at the eastern region, usually it's kind of has a higher net farm income. Usually seems like they get more of the rain than the rest of the association. So they kind of carried a better net income than the rest of the association. And so eastern region had around $83,000 net farm income. The central region is usually our average. And so this past year, it was around $28,000. And then our western region, net farm income was around $55,000, and they usually have a little bit more cattle. So that kind of brought their income up a little higher. Looking at 2024, it's looking pretty dark. I know there was a lot of optimism heading into the year, but we've missed a lot of rain. And a lot of the current assets that we carried forward have been eaten up by the last few years. So it's going to be pretty tight this coming year.
In our next to last association to talk with, we're joined by Jacob Grinstead from North Central Kansas. Jacob, what are you seeing for net farm income in your area?
Net farm income was down this year. It was $83,724. Previously, it was $146,042. And primarily that's in response to drought. Yields really paint that picture. Just looking at some of our no-till, non-irrigated enterprises, we look at corn, and our corn yield this year was 100 bushels on average, give or take, and last year it was 116. Our soybean producers really suffered. This year was 18, and previously it was 40. So that's a significant decrease. I think you look at our cost structure and how that communicates that as well. Our cost per crop acre was 2.6% higher, but then you look at gross crop value per acre, and that dropped almost 14%. So really, it was dryness that was impacting the income of our producers. Crop insurance played a really significant role in propping up farm income, and livestock was another bright spot for producers. So over time in our association, value of farm production has pretty consistently risen in terms of crop income from 2014, and that rise has been a lot less dramatic for livestock producers. So while you wish our crop producers would have had the benefit of a good year as well, it was certainly nice to see our livestock producers having the opportunity to make a little bit more money this year. And that was primarily in response to pricing.
And our final association to check in with is Northeast Kansas with Chelsea Plummer. Chelsea, what are you seeing from your area?
In some senses, we had a little bit a different story than a lot of the other associations. And mainly with that is that crop insurance and government payments did not nearly tell as big of a story for us. We also ranged quite a bit in our association from our bottom southwest corner that had the lower yields, some of the lower incomes compared to some of our northeast counties that still had really good yields and got the rains they needed. So our net farm income was $97,000 this year, and that was down from about $215,000. So in that sense, we were seeing a lot of the same drastic decreases in net farm income as a lot of the other associations. One thing that a lot of people have talked about so far is the livestock side. So this year, when we looked at our value of farm production, livestock made up about 30% of it, whereas in the past, it's normally been closer to 20%. So that livestock value produced went up around $60,000, and that was even with increased feed costs, which get adjusted out of that number. So we saw a big story with the livestock this year. But like I mentioned, crop insurance was not as big of a piece. Our net crop insurance, that crop insurance proceeds minus premiums, was only $12,000. So it was a lot smaller percentage of our net farm income, and total government payments were $18,000 between livestock and crop. We did see dryland corn yields as an association average at 157 bushels per acre, and soybeans 41 bushels per acre, and wheat was at about 60. So overall yields across our association, while in some counties took a big hit, other counties still had just as high yields as they have in some past years. We are definitely starting to see a decrease in a little bit of people's financial position. So they maintained net worth, but we saw current ratios and everything start to decrease, which will start to be important over the next couple of years.
Once again, that was KFMA's Extension Ag economist Chelsea Plummer, Jacob Grinstead, Aaron Meisenheimer, Dillon Rapp, Lindsay Bryant, and Glenn Conover. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you ahead.
This is Agriculture Today. Along with Shelby Varner, I'm Jeff Wickman. We end today's program with this week's milk lines. The recent detection of the H5N1 strain of HPAI, highly pathogenic avian influenza, in dairy cattle is raising questions from consumers regarding the safety of dairy products. K-State dairy specialist Mike Brouk says the U.S. Food and Drug Administration and USDA are both reporting that there continues to be no concern that the circumstance poses a risk to consumer health or that it affects the safety of the interstate commercial milk supply because several safety measures are in place. That includes pasteurization of products before they enter the market.
Today I'd like to visit with our Kansas dairy industry as well as dairy consumers across the state. As we think about the impact of HPAI on the dairy industry, most of you are aware that HPAI has been discovered in dairy cattle in Kansas and some of our other states here in the Midwest, and actually extending to the west and also to the eastern part of the United States. While this presents very little issues for the dairy cows, it in general creates some concern amongst consumers. So many questions have been asked about the safety of dairy products, and today I want to ensure our dairy producers as well as our consumers that the dairy products are safe. There are several reasons for this. Number one, abnormal milk is separated from saleable milk at the dairy farm, and the abnormal milk is either discarded or destroyed and not included in the supply that goes to dairy processing plants. So that's the first line of defense that our dairy industry does to ensure that you have safe, wholesome products in the grocery store for your dairy consumption. Now, the second thing that happens at the processing plant is that the milk is pasteurized. In order to determine, to make sure that these products are safe, even though we've known for decades that viruses are inactivated through the pasteurization process or heating of the raw milk prior to processing, additional tests have been done. And last week, FDA reported the results of those tests. They actually had taken dairy products from grocery stores and tested those for the presence of the virus. They did not find any active virus in those products. They did find some pieces of inactivated virus in a few of the products, but those are not of danger to human health and would not be able to elicit any sort of response in a person because those virus pieces have been killed. So the pasteurization process that we use for our dairy products is safe, and it does deactivate any possibility that the virus might create a human health problem in dairy products. Also, last week we received some results that showed that meat was also void of the virus. So, meat and milk are still safe, what you purchase in the grocery store. Just keep in mind that we need to be purchasing items that are pasteurized. There could be some issues with consumption of raw milk, and there's probably other things that could be in raw milk that may be detrimental to human health as well. That is why we've encouraged pasteurization for all dairy products to ensure that they are safe and wholesome for consumption. This is Mike Brouk with K-State Research and Extension, encouraging our consumers and our dairy industry that the dairy products that have been pasteurized are safe and wholesome for consumption.
Thanks, Mike. And while we have a minute, this reminder. Cattle U, a one-day event full of educational opportunities for High Plains cattlemen and women, is being held June 25th at the Manhattan Hilton Garden Inn. The sessions are tailored to cow-calf producers and offer practical information. This year's event includes an industry panel, educational sessions, as well as an opportunity for networking and sharing ideas. To learn more, go to cattleu.net. That's CATTLEU.net. And that'll do it for this edition of Agriculture Today. For Shelby Varner, I'm Jeff Wickman. This is the K-State Radio Network.